traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Traders, you can find me at www.livewithoscar.com. How's that, Mike? Did I get the name out quick enough this time? All right, I did my job. Traders, futures trading is risky. It can cause substantial financial loss. Please do not play this game if you do not have risk capital. This is video number 671, baby. YouTube video 671. These are technical analysis videos. They are lessons for you to learn from. There are great techniques that are going to come your way in these videos. I have charts I will show you in this video. What I'd like to say, though, is right off the bat, the Nasdaq got above that double top today by 15.5 full points. Go, Nasdaq, go! You know, we have a rule in the OMNI Trading Academy. When you see a double top, you sell that double top. It looks like this. You sell it, especially on a weekly chart. But man, oh man, the S&P, the Nasdaq, the transportation average, these guys don't want to hear nothing about a double top. They are going, Oscar, like you've been telling everyone for the last couple of months, we are as bullish as the day is long. So yeah, baby, yeah, right back into the bull camp are we in the U.S. indices. Traders, we are now above the double top in the Nasdaq. I want to say this. It's a weekly bar chart that we have the double top in. The weekly does not close. That bar will not put a close in until Friday's close. So yes, we're above it by $15.5, and hooray, and the indicators look bullish and the market looks bullish, but we need confirmation. We need Friday's close to be above the previous highs or above the double top in Nasdaq, and that's your confirmation. I say this, I think it's already been bested or broken out above. I think it turns out to not be a double top. That's the way it seems now, especially with us bulling right through it. The markets do look bullish for trading on Thursday, so I'm assuming that we just keep on moving, and that becomes nothing more than a small hurdle that we had to get above. And Nasdaq's looking good. The Russell's looking good. The tranny's looking good. The S&P, now that the Nasdaq has cleared that double top, and the confirmation Friday would be wonderful, 1,300 in the S&P or the ESE Mini. Here we come, baby. 1,300 is coming our way. And we're not going to stop there. We're going to be much higher. Traders, I have techniques and tips and tricks that I have learned over the last 29 years. Some I'm going to show you on this board in a few moments when I do my chart segment. I teach those techniques to students here live in Vegas. It is called OMNI Camp. OMNI Camp is a 4-day training session I hold here live in Vegas. I lock 5 guys in a room with me for 4 days. And let me tell you something. We learn a lot together. When you leave OMNI Camp, you will be armed with the tools that you will need to pick apart any chart you want to put up on a board and figure out where you should be going next, especially the direction. All right, traders, I'm holding an OMNI Camp in February. I've had a lot of people send in questionnaires. I have not qualified more than 4 of them, 3 or 4 of them so far. There are some newbies, and the newbies this isn't a newbie type thing. It's for people who are a little bit better than that at technical analysis. It's not quite an advanced course, because certainly I can do one of those for you, but it is for the trader who already recognizes what a chart is and knows some formations. From there, I can take you to places you'd never dream, but it's not for the brand new trader. We have other courses that we would give them, not this one. You're not going to be locked in a room with me for 4 days. If you're brand new at this, it won't work. So, if you'd like to come to my OMNI Camp that we will be holding in February, simply right below this video, just click the link and it'll take you right to where you can fill out your questionnaire. Then I'll call you on the telephone and qualify you personally. All right, traders, that we got out of the way. The YouTube videos, we'd like for you to subscribe to them, because this way you'll be notified when the YouTube videos get put out. All right, let's go do some homework. What do we have? A green OMNI in the S&P, the ES, the U.S. indices, and a green OMNI in the US dollar, correct? Indices dollar, both looking like they're going up tomorrow. Then we have a red Omni downside views for the euro currency and for bonds. Traders, we stood in front of you weeks ago in front of this camera and held up a bond chart and said, traders, the bonds have topped. The top is in. We have dropped multiple handles since then, and I don't think it's over. Now, if you think the top is in bonds and we're going to continue lower, you got to think the bottom's in the stocks and we're going to continue higher, because that's the environment we're in right now. They will go opposite one another. Here is what's really interesting about what's going on in the markets right now, however. Intermarket analysis. Traders, I have said in I don't know how many videos in the past few months, you need to get ready for phase 2. What is phase 2? Phase 2 of our recovery, of the stock market recovery. Phase 1, you bottom out and the dollar tops out. Stocks bottom out, the dollar tops out. That's phase 1. The stocks start to go up, the dollar starts to come down. When that stabilizes and your bottom is set, you reach phase 2. Phase 2 is anywhere from 3 to 15, 20 weeks of, maybe even longer. Sometimes you get 3 to 6 months out of it. But what you will get in phase 2 are stocks and US dollars to rally together. Now, I have been preparing my OMNIACs for this to come for weeks and weeks and weeks. And I have told them, if we do witness stocks and dollars going up together, then you must recognize that the bottom clearly is in, because that would be phase 2 of a recovery. Phase 1, bottom is in. How do you prove the bottom is in? Phase 2 begins where stocks and dollars spend some time going in the same direction, upwards. That is what is beginning to happen. I see it really starting to take hold now. I don't know if today, if this week, this month is when it finally starts and keeps on going, but we've seen little glimpses of dollar stock moving together over the last 2 months of last year. Now we're getting much more than glimpses. We're starting to get a correlation. That is what Green Omni is for stocks and dollars at the same time. Now, how long will that last? Again, that's a limited life correlation. You do not get dollars and stocks to spend too much time in the same direction. But phase 2 is beginning, and that is what phase 2 is about. It's one of the things that you will recognize when you are in a market recovery. Remember this, for God forbid the next big crash. When you've put your bottom in, phase 2 gives you dollars and stocks in the same direction. All right, so we're looking for that for tomorrow's trading. The charts that I'm going to show you in a couple of moments, they absolutely will depict that we are, for the moment in time, well above the double top in the Nasdaq, making it not a double top. So far, it's been negated. Wonderful thing there. I have charts to show you that we should easily trade 1,300 in the S&P, and that could happen like tomorrow. There's only one thing still on my mind in my analysis that could stop us from seeing 1,300, and very quickly. I say 1,300 comes this week in the S&P. I'm calling that unequivocally. The only thing that could stop that, I say, is if that double top turns out to be one, and instead of us continuing higher, we went $15.50 above it, turn around and spiral. That still could happen. We haven't got our Friday close confirmation on the Nasdaq weekly bar. But the way everything else looks that travels with the Nasdaq, no way is that going to be the case. So I am in front of you right now calling for at least 1,300 this week in the S&P. I have levels as high as 1,307 that we can get to. Wow. I have levels in Nasdaq that would knock you over that I got tonight in my analysis. I'm talking Nasdaq in the 2320s, 2330s, like that. That is what came up in tonight's homework. I have high levels in the transportation average and in the Dow and in the Russell. I have a 1,300 to 1,307 level in S&P. And I have like the 2330s in Nasdaq. All of that came up in tonight's analysis for the week. Wow. So I guess I'm here to say we got to be wildly bullish. The only thing that could stop us is if that double top somehow turns out to be one. Again, I'm saying it's not one. I'm going on record to say we'll see 1,300 before the bell rings Friday this week. We'll see what happens. All right, traders. By the way, the charts that I show you, we have a device or a setup, I should say, called chartupload.com. It is our little baby. It is a safe place for you to go, upload charts, and send them anywhere in the world you want. But it's the greatest spot for you to upload charts and put them in my chat room, my trading room, so I can see the homework you're doing. So please use our chartupload.com. All right. You know, one other thing while I'm making announcements, what I've started to recognize is a lot of you Omniacs have found me on Twitter and Facebook. And hey, thanks for the following and thanks for you guys responding. You know, I'm a bit of a dinosaur trader. I still wouldn't mind doing my charts on pencil and paper if I could. So Twitter's been out for a while and Facebook, and of course everyone's telling me, Oscar, you better integrate. You got to integrate. The guys here at work, Oscar, you got to do it. So this year, 2011, I decided, okay, I will integrate. Wow, the following's picking up pretty quickly. So thank you guys on Twitter and Facebook. Rock and roll, guys, ladies. All right, let's do this. Traders, I want to show you these charts. I want to show you what I'm talking about. I want to make sure that you recognize that absolutely top is in bonds. I want to make you recognize that it certainly looks like the ES wants to move higher. And then from there, we'll do more this week so that you can see a little intermarket analysis. With no further ado, baby, let's go look at some charts. Okay, traders, the first chart before your eyes this evening is the Nasdaq weekly bar chart. In fact, the same chart I put before your eyes in last night's video. Let's look at this chart. From 2002 to 2007, we were all the way down here. Down here, we ran all the way up, and in 2007, we put a high in. Boom. The market breaks between 2007, 2008, 2009. We put a low in. We come rallying back, and yesterday, Wednesday, we went and put in almost the same high as the high from 2007, making it a double top. Top one, top two. Well, what happened today on Wednesday, and I love seeing it happen, although it was costly for us Omniacs, but it was worth it. The stop was small, but here we are. We rallied $15.50 higher than that line, which was previous highs, or I should say, which was the highs of 2007. That would have been a double top if we stopped, dropped, and rolled, so to speak, but instead of dropping, we went right through it and settled at the high of the day in Nasdaq. That, my friends, is an outside day up in Nasdaq and means continuation pattern higher. So I think that we've negated or taken out the double top, and off to the races we are going to go in the Nasdaq. Now remember this, traders, what you're looking at is the entire crash from 07 to 09, the subsequent return rally, and now you are looking at the Nasdaq recovered 100% plus of the whole crash. Crash eradicated at this point, and we've gotten above. Imagine that. So go Nasdaq, go, baby. All right, let's pull another chart. Okay, traders, another one of our leaders, the big kahuna, the Dow Jones Transportation Average. We are now back to daily charts, not a weekly. This is a daily. Look at the trend line. Look at this channel. It's been in a beautiful, beautiful parallel channel, and it does not seem to breach the channel. It seems to hold it every time it gets near it, and up it goes, right? Well, we just kissed the bottom of that channel on Wednesday and rallied and settled right at the highs of the day. That is bullish, kissing the channel. Bullish indicators are now turned. I like the leader. Transports looks great. Let's pull another chart. Next on the block, the Nasdaq once again, but we are now looking at a daily bar chart. Once again, traders, look at this beautiful channel. Look at the respect the market pays to it when it gets near it. We dropped under the channel today on Wednesday, turn around, blasted off and settled here at the highs, above any highs from last year, above any highs from 09, above any highs from 08, and above the highs from 07, baby. That's where we settled today. That is a bull, and it is on its way. I love what I see in the Nasdaq. Let's look at another chart. Traders, 1300, here we come. ES March daily bar, 1300 is your next resistance level. That is very likely where we're going to go. Remember this number, 1280. When we clear 1280 tomorrow, it is a breakout above 1280, and you break out in S&P. And my work says 1300 to 1307 should be a very, very attainable level this week. Once once ES can get above 1280, which should happen on Thursday, what this video is for, all bets on the short side better be off for you bears, because this is going up to 13. We are about to break out now of this little baby channel and work our way back into the larger channel. That's what's happening now. Here is your target. I say it could happen within 2 days. Keep your eyes on that one. Again, traders, there is only one thing on this planet, technically, that I can see stopping this from happening, and that would be if that Nasdaq double top actually turns out to be one. But the chart I just showed you basically negates any fear of that being the case. So, we are buying dips in the S&P. Omni's already got levels where it would absolutely react. Come to my site and take a look. But on the opposite end of the spectrum, if we do not get our buy levels down here and we break out above 1280, I think you can buy the breakout, something Omni is not usually willing to do. Thursday, I think Omni would be more than willing to buy the breakout. So that's your S&P. Let's look at another chart. Okay, traders, you are looking at the reason why you should be bullish the stock market. This is the bond market. It is a weekly chart. You have seen this chart many times, traders. In fact, this is how we called the highs. This is how we said the highs were in. This is why I was brave enough to get in front of my camera and say the highs, the top in bonds are in, and we are going to break. Well, that was basically 10, 11 handles ago. The bonds literally dropped 11 full points since Omni called the high. And we think the bonds, not only will this target be achieved, which is way down between 109 and 108, we think you will trade 104. We think you'll trade so low it's not on the chart right now. That's where we feel bonds will trade before this drop is over. Traders, what you're looking at is this. Huge head and shoulders in the bond weekly. If you're an Omniac, if you're one of my YouTube fans, you recognize that after a head and shoulders, I expect a head test. If, in fact, you fail at the middle to the top of the head, that tells you that this head and shoulders is real and the big drop starts. So, shoulder head test, the failure, the big drop starts. Omni calls for the highs up here, and it has been dropping since. Omni is steadfast that the highs are in. Omni is steadfast that not only will this target be achieved at 114, you will go much, much lower than that before this year is over. Traders, we've already had 10 to 12 handle drop. We expect at least one more before these bonds are baked on the downside. So this chart should absolutely convince you that the top is in bonds, because we've shown you that it is. And this chart was here when we first started showing it to you. And it should convince you that phase 2 is beginning in the S&P stock market, and that the S&P is absolutely bottomed and recovering. This is the chart that should convince you of that. Traders, pull your own charts, do your own homework. Make sure you look at the weeklies. Make sure you look at the dailies. Look for general direction. Check your indicators, and come check me out at the site. So, traders, you've seen the charts. That is my technical argument for why this thing right back in the saddle, right back to the upside. That's the way I want to go. Traders, you know last night in the video I tried as hard as I could to kind of say, I really don't think this swing, this double top's going to work. I really don't want to be calling this short. But again, I told you how many times last night that would be infusing my opinion upon the analysis. So I don't play that game. I will say this. I didn't like the idea of going short yesterday. I would not like the idea of being short today. And we're not going to be. Yay! Back to the longs. I love the long side of the market. I do not want to be short, believe me. All right, so we covered the Nasdaq. We talked about the S&P going to 1,300. I absolutely think it will. Again, I'm on record saying I think it'll happen as early as this week. There's only 2 days left. rock and roll. We do have some reports coming out, but you know the fundamentals come out in the charts first. So reports for schmarts, who cares? Keep your eyes on the technical analysis. Those reports will take care of themselves. Traders, I am a broker. If you'd like to open up a trading account and work with me personally on the phone, through the internet, whatever makes you happy, but you can work with me personally as your analyst and mentor, come to my site, fill out an application to open up a trading account, and then come hang out with me, and the rest will happen. All right, traders, let me get out of here. Long video. I want to leave. This guy's got me selling everything in the world. I'm done selling. Am I done selling?
You're done
We
selling.
finished? I'm like the dancing monkey here. All right. So, come to the site. Come join me in my chat rooms. Don't trade alone. Keep your emotions out of trading. One of the best things you can do to help yourselves with keeping your emotions out of trading is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stop sorry! Emotions are out!
Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.